Part 2, 44 marks, therefore you have 14.5 minutes reading time. Ignore any form of taxation. You are an audit manager who recently started working at Act and Tax Inc., a prominent consulting firm in South Africa. After holding feedback meetings with the trainees assigned to your diverse client portfolio, all listed on the Johannesburg Stock Exchange, the following unrelated matters were identified. Matter number 1. One of the firm's largest customers is First Bank Limited, First, to whom A&T provides technical advice. The senior partner asks you to assist with some of the technical queries First raised. When providing assistance on technical matters, you may assume that all current IFRSs have always been in existence, are currently fully effective, and that First applied these IFRSs since its incorporation. Information regarding First, right, not First Limited. First is an institution that provides financial and cash services to its customers. Its head office is in Cape Town, South Africa, with branches all over the country. The company has a 31 December year-end. First employs over 80,000 employees. First has the following strategy. Our strategy is to be an African-focused customer-centered universal organization which drives Africa's growth and creates value for all our stakeholders. Our customers are at the center of everything we do. We strive to change the way we do things, develop our people, and shift our culture, and ultimately create a sustainable competitive advantage in changing industry. Closure of 80 branches. Immediately, this should ring a bell, guys. Your IS 19 possible termination benefits that should be paid, and a possible IS 37 provision. During the first quarter of 2019 calendar year, the management of First decided to close 80 of its branches in South Africa by the end of December 2019. This is part of First's plan to realign its retail and business banking delivery model to the changing needs of customers and with the rapid adoption of digital banking products and services. As part of a support program agreed with the trade unions, First will implement a comprehensive exit package which will adhere to the requirements set out by the Labour Law Relations Act. The management of First provided you with extracts of board minutes regarding the decision to close 80 branches. Refer to Annexure A attached at the back. Transaction with ESA. Due to the fact that the national provider of electricity, ESA, does not have enough electricity available to meet the national demand, load shedding was introduced in South Africa a couple of years ago. First's board of directors identified this is a possible business risk. In response to this risk, First decided to install power generators at all its automatic teller machines, ATMs, to keep them in working condition 24 hours a day, 7 days a week. On 1 January 2018, First entered into a contract to lease 3,000 generators from Power SA Limited until 31 December 2023. We are able to identify IFRS 16. Mr. Gerald Fox, the operational director of First, believes that by this time, ESA will have sufficiently increased its capacity and that the load shedding will be something of the past. Consequently, First has no intention of renewing the contract after 2023. Remember, we are able to identify that this is our lessee, therefore recognize the right of use of the asset and the lease liability. The indicator as First has the right to operate the generators, but will not receive the legal title of the generators after 31 December 2023. An extract of the contract applicable to one generator, important to one generator, is as follows. A Ryobi 2-strike generator will be provided to First to use from 1 January 2018 to 31 December 2023. Equal installments of 200 Rand will be paid quarterly in advance, right? Beginning on 1 January 2018. A final payment of 400 Rand future value will be made by First to Power SA on 31 December 2023. The fair value of a generator on 1 January 2028 is 4,000 Rand. Power SA expects to be able to sell each generator at the end of the lease term for 1,500 Rand. The following extract from the accounting policies is provided. Right of use assets are measured in terms of the cost model of IFRS 16 property, plant and equipment. First depreciates all depreciable assets using the straight line method. First did not elect the recognition exemption applicable to low value leased assets as per IFRS 16 paragraph 5. First discloses its right of use assets in its leases note separately from owned items of property, plant and equipment. Remember, when you refer to IFRS 16, it indicates to you can either include your right of use assets in your column, right of use asset, with your PPE, or you can have this completely separately, your right of use asset note. Now, they indicate to us that they will have a separate note. First discloses total future finance costs in its lease liability note, and First records accrued interest in the lease liability account. Annexure A, extract of board minutes. On 10 May 2019, the board met to discuss the closure of some branches for the first time. No decision was made, and the matter was postponed until the next board meeting on 30 June 2019, when they will be voted on this matter. Then on 30 June 2019, the board voted in favor of the proposed closure of some branches, and a decision was taken that between 70 and 80 South African branches will be closed. A task team was tasked to identify the branches to be closed. On 15 July 2019, the task team identified 80 branches which will be closed. The board requested a meeting with the trade unions to discuss details about the closure of the branches. Then on 8 August 2019, the board met with the trade unions and discussed details about the closure of the branches. It was agreed that this decision will be communicated to the affected employees at the end of this month. Right. Then on 31 August 2019, the following were communicated to the affected employees. The names of the 40 branches which will be closed in Gauteng, resulting in the termination of all 500 employees employed at these branches. The names of the 18 branches which will be closed in the Western Cape, resulting in the termination of all 300 employees employed at these branches. The names of the 22 branches which will be closed in the Free State, resulting in the termination of 180 employees employed at these branches. Each of the affected employees, each of them will receive a once-off cash lump sum of 70,000 Rand 3 months after closure date of the branches, and all the affected branches will be closed on 31 December 2019. Okay, they communicated all of this 31 August. For September 2019, First made a public announcement about the closure of the 80 branches. Then on 30 September 2019, First recognized a restructuring provision in terms of IS 37, provisions, contingent liabilities and contingent assets for the restructuring costs to be paid on 31 December 2019. Matter 2. Marnus Mabena, one of your audit trainees, is reviewing the financial statements of Winfront Limited, a client that provides warehousing, logistics and car rental services. Marnus is struggling with the classification of certain items in the statement of financial position. The following is an extract from the statement of financial position of Winfront as at 31 December 2019. Notes: liabilities, non-current liabilities, and long-term borrowings. Now 661458 and refer to Note 1. Note 1. On 1 June 2019, Winfront obtained a loan of 625,000,000 from Conceptual Limited for the construction of a large technologically advanced warehouse. The expected completion date of the warehouse is July 2022. As per agreement with the bank, Winfront will only start repaying the loan after completion of the project. Therefore, this is as per the agreement. However, interest is payable annually on 31 May at 10% per annum. The loan agreement with Conceptual contains a financial covenant on the debt to equity ratio, which is a clause that requires Winfront to maintain a maximum debt to equity ratio of 2.6 to 1. This is in line with industry norms. Should Winfront breach the covenant, the loan will become payable on demand immediately. On 15 December 2019, the financial accountant of Winfront discovered that its debt to equity ratio increased to 3.2 to 1. This was mainly due to significant fair value adjustments, which were processed in accordance with international financial reporting standards. Then on 10 January 2020, Conceptual agreed in writing to waive its right to enforce the loan covenant, therefore to take this out for 1 year until 31 December 2020. Authorization of financial statements. Okay, guys, before we look at the authorization, what do we need to identify? Is 1, preparation of financial statements. Authorization of financial statements. The financial statements of Winfront for the year ended 31 December 2019 were authorized on 20 February 2020. Normally relates to an IAS 10 question if we think about this, but remember, we don't have the requirement yet. We haven't read it. Matter 3. Grace Kamalo, one of your audit trainees, is currently working on Sunflower Limited. Sunflower, which has a 31 December financial year end. Grace has the following outstanding issues to finalize. Annual leave. Immediately identify IAS 19. If we think about annual leave, what is our formula? We need to determine the number of employees. We always need to determine the days, and we need to determine the rate per day. Now, this is your formula, guys, with IAS 19 annual leave. Okay, it is practice of Sunflower to increase the employees' gross salaries and consequently the total cost to company with 6% on an annual basis. The annual increase is effective on 1 January each year. The leave pay accrual on 31 December 2018 amounted to 1,744,200, of which 697,680 was paid out in cash during the year ended 31 December 2019. The number of working days per year is 260. The leave cycle ends each year on 31 December. The tariff that will be used to measure the leave pay accrual when employees are expected to be absent during the leave days will be based on the cost to company for the employees. Okay. The following information relates to the employees of the company for the financial year ended 31 December 2019. Number of employees, 200 at year end. Average gross salary, 240,000. average cost to company 285,000, annual leave entitlement per employee 26 days, annual leave taken during the current year per employee from the current year's entitlement 16 days. These employees can carry forward any annual leave days not taken during the year to the following year. Any annual leave days not taken by the end of the following year will be paid out in cash at the end of that year. Based on past experience, 60% of unused annual leave days at the end of each year will be utilized, therefore will be used during the following financial year. It is expected that none of these employees will resign before the end of 31 December 2020. No journal entries have been posted yet with regard to the leave pay accrual for the year ended 31 December 2019. Okay, so guys, if they indicate to us that they expect 60% will use the leave, then we can assume that 40% will be paid out in cash, right? Bonus. In July each year, Sunflower distributes a bonus to its employees, which is equivalent to 25% of the previous financial year's profits. The bonus accrual on 1 January 2019 amounted to 1,312,500. Profit for the year ended 31 December 2019 amounted to 6,157,500. The actual bonus paid in July amounted to 1,154,531. Employees who leave before July will forfeit their entire bonuses. It's expected that none of the employees will leave the company before July 2020. Requirement of Part 2. Okay, so guys, you will remember that I've indicated to you your first step when you are able to is that you need to allocate your minutes. Therefore, you take your marks times 1.5, and this will be your minutes per section. Therefore, when you look at this, Part 2A, a total of 13 marks, 19.5 minutes. Part 2B, 16 marks, 24 minutes. Part 2C, total of 5 marks, 7.5 minutes. And D, 10 marks, therefore 15 minutes. Right, okay. Now, you will remember, if you make use of my example, that I prefer that you allocate when you have to be finished with your sections. And you had to be finished by 9:24 with Part 1. Therefore, with Part 2, we need to now start at 9:24 on your watch. Therefore, if you add your 19.5, 20 minutes, or round down to 19 minutes, you have to be done by 9:44. Part 2B, done by 10:08. C, done by 10:16. And D, done by 10:31. Right, okay. Therefore, you need to be finished within your time for Part 2. Now, let's briefly read through the requirement before we attempt each section on its own. Part A, refer to Matter 1. Discuss with supporting calculations the appropriate accounting treatment of the retrenchment costs to be paid to the employees of the 80 branches, which will be disclosed in the financial statements of first for the year ended 31 December 2019 in accordance with IFRS. A discussion with regards to presentation and disclosure and the conceptual framework are not required. Okay, now guys, we know retrenchment costs. You need to identify that this relates to your IS 19 principles. Right, Part 2B. Refer to Matter 1. Disclose the notes of the right of use asset and the lease liability. Look at this, guys, and the lease liability as a result of the agreement with Power SA that will accompany the financial statements of first for the year ended 31 December 2019 in a tabular format in accordance with International Financial Reporting Standards. The finance cost expense notes for the current year, the cash flow statement note, accounting policy notes, and comparative figures as it relates to the lease contract are not required, right? Round all calculated amounts to your nearest rand. C. Refer to matter 2. Discuss with reasons whether the loan from Stovall has been correctly classified as a non-current item in the statement of financial position of Winfried as at 31 December 2019 in accordance with IFRS 1. Okay, guys? Now, if we look at this as non-current, I want you to immediately identify this can either be a current liability or a non-current. Okay. D. Refer to matter 3. Prepare the journal entries of Sunflower Limited to account for the employee benefit expense in the statement of profit or loss and other comprehensive income for the year ended 31 December 2019. Journal narrations are not required. 10 marks.